Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. A 200-point recovery from the lows is what we are seeing on the Nifty. Started on the back foot, but we have covered a lot of those gains also, or losses for that matter. Midcap's doing well. It's a green-looking screen so far, but of course, a lot of sectoral indices, they have come in for some profit booking.
Some profit booking, especially, earnings, wherever there have been misses, there have been significant reactions, both on the positive as well as the negative side. Quite a lot lined up on this particular edition of the show. Let's start off with the top headlines. Key indices recover from the day's low to trade near the day's highest point. Realty, metals and consumer durables are key gainers, while utilities and healthcare are the big drags. Mid-caps underperform.
Voltas climbs more than 9% after delivering strong Q1 numbers that were above street estimates. Revenue from operations up 47% on a YOY basis, saw strong growth in the UCP segment and sharp recovery in the EMPS segment.
Amara Raja Energy surges over 7% after unveiling its 9,500 crore rupee gigafactory to build battery packs and lithium-ion cells for EVs. Management says they are bullish on light electric mobility and unidirectional growth in 2- and 3-wheeler EV segments.
Inox Wind surges over 16% after reporting good Q1 FY25 numbers. Management tells CNBC-TV18 they are guiding for 15 to 16% margins for FY25 and see an upside risk to margin guidance.
Good afternoon. Welcome to Midcap Radar. It's a green-looking screen. It really wasn't looking that way at the start of the show and at the start of the day especially. A couple of stocks on the radar. First on the list, Siemens. Despite the stock actually delivering quite a muted set of results, the stock in fact saw quite a bit of a recovery from the day's lowest point. The other couple of stocks on the radar, one of them is Balkrishna Industries. Even though this company reported a very strong set of numbers, the stock reaction has been quite muted, and this is on the back of a slightly muted guidance. But there are a lot of stocks from the broader end of the markets, and Hormaz is standing by the wall to take us through the special list of mid-cap movers.
A significant recovery in the benchmark indices or the broader markets itself, and it is showing up on the screen as well, putting aside to all the concerns that were there at the start of the session. But the mid-cap gainers, then Amara Raja, as you just highlighted, say 7% higher now, slightly off the highs of the day, but still trading with significant gains, 1,700 now almost on Amara Raja. Glenmark Life is the other gainer, 7% higher. HFCL and Welspun Corp also having a good day in today's session. Earnings reactions have been on the extremes in today's session, and we'll start off with the ones that are the good ones first. Inox Wind has now extended gains. It's up 19% now, 207 on the stock, a record high. Voltas also continues to gain strength, 11% higher now at the highest point of the day, as is Jubilant FoodWorks, 9% higher at 650. Some of the not so good earnings reactions, Sun TV continues to extend losses, 10.5% lower, now the top loser on the Nifty 500. Bharat Dynamics has recovered, but still trading 6.5% lower. Balkrishna Industries, as Vivek just mentioned, and Midani is the other PSU that has not done very well after its earnings, 5% lower. Railways as a sector is doing well. That is because of the government approval to a lot of projects on last Friday. RVNL is now up 10%, and that may also be on the back of a potential MSCI inclusion. The announcement happening tomorrow early morning. Titagarh Rail, IRFC, IRCON, all of them building on to gains. And lastly, some of the stocks that are doing well on the back of volumes. And Aavas Financiers off the highs of the day, but doing well on strong volumes, as is Saregama and stocks like Lakshmi Organic. Back to you guys.
Okay, some of them have been making one-way moves in the last couple of trading sessions. Thank you so much, Hormaz, for joining us as always. So that's the list of mid-cap movers, some notable moves that we are seeing in the market today. Let's talk about some earnings then. Insecticides India reported a strong set of Q1 numbers. The management has guided for double-digit EBITDA margins for FY25. They're anticipating strong growth in the B2C segment as well. Rajesh Agrawal, Managing Director of the company, is joining us now to discuss this further. Mr. Agrawal, good afternoon. Thank you so much for joining in. You indicated in the press release that B2B and export division face challenges due to lower pricing and unfavorable market conditions. These two are around 29% of your total revenues. Can you give us a sense of what is the pricing situation right now? Has demand recovered? And going forward, do you expect some recovery in these segments?
Yeah, the market has stabilized now. And the prices I would say, they have already touched the bottom, and there are slight increase which has already started happening. So what has happened to the B2B segment is, since the prices for certain products have come down a lot, so even after doing the volumes in the international market as well as the B2B segment, they are not able to achieve their numbers. So they are trailing behind a little. But I am quite hopeful that in this year, in the complete year, they will achieve their targets and they will not trail. But yes, the B2C business is really growing, and particularly our premium segment where we are focusing, and they are the engines for our growth. So all those products are really doing very well actually, and very well accepted in the market. So since we have the major growth coming from these products, and that is the reason that our performance is showing good results.
Mr. Agarwal, welcome to the show. One more question. You said that the B2C is going to be the engine for growth. Could you quantify how much do you expect that growth to come by as far as FY25 is concerned? And another question, last time you joined us, you said that there are quite a few products in the pipeline. In fact, you indicated around 6 to 7 new launches. You also had a tie-up with a Japanese company. Has that come on stream? Has that contributed in Q1? And, going forward, what is the kind of product pipeline do you have?
We have a very strong pipeline. I still say there are 5 more products which are in pipeline now, and they will be coming in this quarter, some products, and some products will be coming for the Rabi season, and they will be introduced also in the market. So our new products are doing very well actually in the market. So the products which are launched in the last 4 years, they have contributed more than 500 crores in B2C segment. And the products which were introduced last year, they have contributed 50 crores. And this 50 crores has come when the products were delayed in their launches. So all those products have shown very good results in Q1, and in the Q2 they will continue with the good numbers, and we should be able to show substantial increases in them. So the vision is that from our premium segment, we should show a strong double-digit growth actually. So,
double-digit. Yes, go ahead, Mr. Agarwal.
Yeah, it will be a strong double-digit growth from these premium products, and our only focus of growth is from these products actually. We call them focus Maharatnas and Maharatnas, which have already contributed roughly about 60% in Q1, and last year contribution from 51% had increased to 59%. Our vision is that we wish to grow these products to 75% in next 3 years.
That is of the total revenues or the B2C revenues?
B2C revenues.
Okay. You indicated you're expecting 10% revenue growth and 20% volume growth in the B2C segment. I just wanted to understand, does that mean that pricing will be lower because the revenue growth expected here is lower than the volume growth? And will this volume growth be led by newer capex which is coming up? You have the Dahej plant, you're talking about more focus on premium products. Can you explain the rationale for this guidance?
Yeah, when I say that volume growth is coming, yes, the new products are supporting and they are going to the market, and of course they are leading to the volume growth. When we talk about the B2C business or the brand business, here everything works on the credit limits actually. The credit limits of the network is fixed. The staff, they have their targets, and accordingly they have to work the sales teams in the market. So sometimes when the prices go up, the volumes get a hit. But at this time when the prices are reasonable, or I would say affordable, so the volumes of the target products are going up actually. And season is also favorable because the rains, I'll not say that across the country they are very, very stable, but more or less the crop condition is overall very good, which means that this Kharif season is going to be very good. And since the dams are already started filling in most part of the country, so the expectation from Rabi season is also very good. So overall,
Mr. Agarwal, yes, you are talking about strong growth. Just to follow up on that, when you say newer products will lead to volume growth, there's no pricing pressure that you're seeing in the B2C segment. I just want to confirm that.
Prices have come down, but at the same time, the inventory prices has also come down. I mean to say my purchase price is lower. It is selling at a lower price in comparison to the previous year. But in percentage basis, the margin is not poor. It has increased year on year.
Okay. Mr. Agarwal, okay, so now that you've spoken about margins, let's talk about EBITDA margins. EBITDA margins this year, you said that you will come at double digit. Now, yes, this particular quarter, you have come close to the 11% mark, after being in single digit last year. Now, what kind of visibility do you have, and could you give us an exact number as to what exactly will be the EBITDA margin and the guidance that you can give for rest of FY25?
Exact things are very difficult to say, but I'll say that in the complete year, we'll maintain the double-digit margin. So 10.89 is something which is visible in Q1. I'll go a little cautious for Q2. Though Q2, the sales looks good. How much we are able to capture and how the things behave, that will depend on that. Because if there are floods, then there might be a different situation. And if that flood really leads to a loss, or it is a small loss which gets recovered. So many factors are there. But still broadly, I am very, very sure the way I look at the season in the entire country and also in the international markets, that our EBITDA will not decline below the double-digit percentage.
Okay. Quickly, Mr. Agrawal, if you can tell us, exports, they've been under pressure, but what is the target for this year? You had indicated 150 crores for FY24, but because of demand weakness, it came in lower. What is the FY25 guidance here?
That target will remain, will not bring down the target, because yes, there is demand. There are a lot of issues which we are facing, but I think the things should improve because the freight cost has already started coming down. Currencies issues are there in certain countries, but I think we should be able to resolve that.
Thank you so much for your time, Mr. Agrawal, and thank you so much for joining us here at CNBC-TV18. We'll now slip into a short break. The management of SPAParis joins us next to discuss their Q1 numbers and the way forward. Welcome back to Midcap Radar. The next corporate on our radar is SPAParis. The company saw a muted revenue growth in Q1, while their margins also were under pressure. To discuss this and more on the Q2 performance, P. Sundararajan, the Chairman and Managing Director at SPAParis, joins us now. Good afternoon, Mr. Sundararajan. Thank you so much for joining us. First up, Q1 appears to be slightly soft. What was the reason for that? And going forward, Q2 onwards, do you expect to see a recovery? And can you quantify the recovery in case you expect?
Sure. In Q4 we had some pressure on the workforce mobilization, which used to be our challenge before, and the orders what we have booked, we had to delay the shipments in Q3, so it got delayed automatically. So we immediately reduced our order book in Q1 shipments, and to make sure that everything is back to normal. That's the reason why this has been Q1 is flat. There was no growth in it. But however, for Q2, we are back to normal, and Q3 we will be making big jumps on this one. And with regard to the margin also, because of the late delivery, there are air freights, and in addition to Red Sea issues, and air freight was exorbitant, so we had to pay out all the air freight charges. So that has let down the margins to some extent.
Okay, so exports were impacted because of freight rates, something that we've been hearing from other exporters as well. Mr. Sundararajan, so can you confirm you have a guidance of 15 to 1600 crore rupees in terms of top line this year and 7 to 10% guidance for the organic business? Do you stick to that? And what is the margin band that you're looking at?
See, the margin is, as I always say, the EBITDA margin is about 18 to 20. So we are able to maintain more or less that one. So we still continue to maintain that.
Okay, sir. So you have a top line guidance in the range of 1500 to 1600 crore. Q1, you've done around 250 crores. So the ask rate for the rest of the year is quite steep. And even when you're talking about the EBITDA margin, it's coming at close to 13.5%, and you're giving us a guidance of close to 18%. So what is it that is happening on ground that gives you the confidence that you would be able to beat it? Is it simply because most of the issues you had in terms of the workflows is now done, or is there also significant demand uptick?
Yes, we have been able to mitigate the workforce challenge, and we are back on track now. And yes, because the Q1 was lower, but Q3 and Q4 we are expecting to be average it out. And in addition to that, whatever we said about 1500 crores is including young brand acquisition, which is about 300 to 340 crores of business. So adding that, we would be able to maintain that top line. And with regard to the bottom line, also we would be able to maintain this. This 13 is because of this Q1 is because of the air freights, but we will be back on track from Q2 onwards. And I'm confident that we are working towards it and will be able to achieve it.
Okay. Mr. Sundararajan, while we're talking about Q1 numbers, a lot of other updates have started happening in Q2, and the Bangladesh unrest is one of them. What is your sense? The street is very excited about this for the garment industry in India. Are you seeing any shifts, any demand inquiries which has come by from other countries to India or SPAParis because we are seeing a visible shift from Bangladesh? What is the impact across the value chain because of this?
Yeah, see, this is, is immediately the whole market has reacted See, this Bangladesh issue has been, it's not a new thing. This has been happening for several years, like, unsafe buildings, building stability is an issue, fire safety issue, and workers unrestness. So all these things have been happening all these years. And the retailers have been already planning to, divert some of the business from Bangladesh because they were putting most of the orders to Bangladesh because it was duty-free thing. But already they have started moving little bit from Bangladesh to Vietnam, Cambodia, India, and Sri Lanka. So that is what is anyway happening. So what they all feared has happened this time also. It was not something that they could take a decision all of a sudden. This has been an ongoing process, and because of this reason and China plus one strategy, we have got the business for Sri Lanka production, which is going up and running now.
Okay, so give us a sense of the input cost pricing, and going forward, how do you expect to see net realization trends pan out?
Net realization per piece, you mean?
Net realization for the garment segment.
The garment segment, there will not be any change. That's what we feel. There is not going to be any change in that net realization.
And how are input costs? Are you seeing any pressure on that front?
No, it's not. See, because of this Bangladesh issue, the yarn export might take a hit a little bit for the time being until it is restored completely. So the yarn demand will come down here in India. So yarn prices might come down or it will be maintained. But at the same time, there will be order inflow will be much to India because of China Plus and Bangladesh one. So everyone has to work towards increasing their capacity. And we are geared up for it because we have a new project coming up in October, November. One new project is coming up, and we are also increasing our existing setup and Sri Lanka operation and acquiring a factory like Young Brand one. So all these things, we are ready for ramping up of this capacity growth.
Okay, so a lot is happening with the company and the sector overall. Yarn exporters have already started talking about some demand issues from Bangladesh, so that tends to do well for for companies like yourself. Mr. Sundarajan, thank you so much for joining us today and giving us your insights about the company and generally the industry as well. So exciting time looks like that for the textile industry going forward. We'll do one thing, we'll slip into a short break. On the other side, we'll focus on some stocks reacting to their Q1 earnings and a lot more. Stay tuned. Welcome back. You're still tuned into Midcap Radar. MAPA India, that's the stock which is surging in trade. Reema Tendulkar is joining in with what the company said after the Q1 numbers. Reema.
Thanks so much for that. So today the company at 11 o'clock held its conference call where the company reiterated they're on track to achieve the 1,000 crore revenue milestone by FY27 or FY28. Now, if you remember, this quarter the revenue growth has slowed down. Now, that is on account of a ramp down in their auto client Hyundai Kia. But they also said that these were ramp downs of old programs of Hyundai Kia. The new programs have already begun to ramp up and the revenue benefit should accrue from Q2 onwards. There was also a lot of discussion surrounding competition and the fact that competitors are now offering discounts. So to which the company said that, they've seen competition over the last so many decades. They're not very worried about competition. The company has reduced prices, but they're not concerned about it. For some of the very small customers, their discounts go up to as much as 70%. But for the larger customers, the pricing has remained stable. Back to you.
Thank you so much for that, Reema. Stock doing very well in the session after the conference call. But the next company on our radar is Neogen Chemicals. The company reported a good set of Q1 numbers. Earlier today, we spoke to Hareen Kanani, the managing director of the company, and discussed the company's outlook going forward. Listen in to what he had to say.
Overall, we have estimated this year it will contribute somewhere around 75 to 100 crore. But next year, when this capacity will be fully utilized, we see a revenue of at least 250 crores. On the EBITDA basis, depending on price of lithium, it can be somewhere around 16-17% on EBITDA. So that's basically the margin. So let's say on a full utilization basis, Neogen Chemicals, traditional business, including organolithium, can deliver on a good year 18-20% kind of margins. Let's say on the lower side, around 16 to 18%, what we are seeing the trend in last 1 year. And the battery business, ROC basis around 20% plus. but on margins, maybe around 16% EBITDA is what we are expecting.
Well, that was the management of Neogen Chemicals, but that's all the time we have on this edition of Midcap Radar. Your stocks when we return.